welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. The mid-cap market has undergone a considerable amount of churn so far this calendar year. Several funds are actually giving negative returns if you're looking at the last 3 months or 6 months performance. But we all know patience is the key when it comes to equity investments, as long as you're in the right kind of mutual funds. So this week, we put the spotlight on some of the biggest mid-cap funds out there in the country and whether they deserve a place in your portfolio. Joining me to do that is Feroze Azeez, Deputy CEO of Private Wealth at Anand Rathi. Feroze, great to have you on the show as always. Thanks so much for joining in.
Thank you, sir.
You know, we decided to invite you back because I remember a conversation on the 5 biggest mutual funds of India, and I think we had a good response for that. So right now, I think it's very important to know what's happening within the mid-cap market. There are questions because stocks have been falling. The index itself is down quite a bit. When do you know that you need to stay put, and this is just a market phase, it'll get over, and when do you need to start worrying about your mid-cap fund?
Of course, when you see such carnage in specific mid-cap stocks, then it's very important to understand your fund deeper and see whether you have to stay the course or is there some corrective action needs to be done. Because that trigger of a movement outside is not as crystal clear to most viewers or investors, whether that's the trigger to move out or stay in. How does one do that? First, you have to categorize whether the problem is internal or external. So when you're looking at a fund, external falls could be like from January. There has been a large underperformance on the mid-cap space. Nifty is close to where it started falling from, but the mid-cap indices are still down 10%. The small-cap indices, in all indices might be down 10-12%. So this underperformance of most of your mutual funds today in the mid-cap space is not driven by fund managers' negligence or fund managers' bad stock picking. If the index, 2 indices which are large and mid have a divergence of 8-10%, it is but natural that if a person has got some money, if not all, in that, there will be dispersions from Nifty.
Sure.
We track Nifty and Sensex more, right? Not too many people would know what is BSC, CNX mid-caps level today, right? But Sensex would be back of people's palm. So that's because you're tracking an index which is large cap and the variable which you're tracking has done better. And sometimes the variable which you're not tracking does better is when you start giving all the credit to the fund manager. Don't do that either, because the small cap indices have rallied so much. So if today's current contemporary situation, I would attribute this fall in the mid-cap mutual funds NAVs largely due to an external factor. That's one thing which you should keep in mind.
Okay. However, there is also a lot changing, within mid-cap funds. We've heard of companies where there are auditor resignations, corporate governance issues have come up, and those stocks have completely gone off the radar. I mean, 40-50% kind of a fall. Actually, some of those stocks are even held by certain mutual funds. But those cases aside, right now, should one just pass this off as a sectoral phenomenon because most funds are down? Should you sort of, let's say, wait till the end of the year to take a call on your mid-cap funds or small-cap funds that you may have?
See, I have been of the opinion that it's going to be a large churn in the marketplace between large cap and mid cap. Ever since I saw the October 17 circular, I've been of the opinion that there'll be a huge movement. Domestic institutional flight of capital between stocks is one of the reasons why the carnage has happened. Today, if you look at, there's 1 lakh crores of mid-cap funds, totally. Right?
Assets under management.
Assets under management. Then what happens is there are several stocks which these mid-cap fund managers end up owning. Now coming to what should one do? Should they just stay the face and you would assume that this mid-cap correction would reverse? I think large portion of the damage is done. So today doing any corrective measure would actually be a wrong measure in itself. So if you just stayed the course, the capital will come back and then there will be a rally again, and this dispersion has always not lived. Now we analyzed some dispersions between large cap and mid caps in the past. Past 3 years has had large dispersions between mid-cap and large-cap 8 times. And you would see that subsequent 6 months, this disparity corrects itself. So data also seems to indicate, if history has any meaning in our future, that this dispersion will correct itself and mutual fund NAVs will tend to outperform Nifty because mutual funds will have some mid-cap exposure unlike Nifty.
Okay, fair enough. So just stay put. No reason to panic right now. That seems to be the takeaway. Having said that, Feroze, before we get started with our analysis of the biggest mid-cap funds in the country, beyond obviously past performance, and we all know that is perhaps the worst way of picking a fund. What are the other things perhaps that you can think of or try and keep in mind as you're going down the fund selection journey? What are the, let's say, the biggest triggers or parameters for you personally?
For me personally, like you said, Surabhi, performance is one element of it. If you look at investing has two sides of the coin. One is return, one is risk. And there are other things which can actually indicate the future. Point one, return should not be seen only calendar year wise. There's something called rolling return. Rolling return means it gives you 3-year returns of any investor. If you bought on any given day and sold it after 3 years, what is the return? Average return. That's called a rolling return. You can't just look at last 3 years, because last 3 years is not good enough. You have to look at 3-year rolling returns. Point one. Risks have to be measured and looked at. The good part is there are two risks. One is standard deviation and beta. These are of course seemingly technical nomenclature, but they're actually very simple. Higher these numbers, higher is the risk. Okay. So as simple as that. Beta is a very small variable which says 1. Beta greater than 1 means riskier than the index. Beta less than 1 means lesser than the index. Risk is lesser than the index. This is basic arithmetics. Yeah. If it's greater, you be. So risk is one, return is another, fund manager behavior is another, where we try and check, at least we personally check, because that will not be information everybody would have, but finding out the decision making capability of a fund manager. How many right decisions did he take? How many wrong? There are about 145 equity fund managers in this country. 21 of them take more number of right decisions, almost 75-80% right decisions. Stick to those 21 and you'll be okay. If I could, because this is just out of curiosity, which are the top 2 or 3 that rank highest on this parameter, that they get more decisions right than wrong? See, there are 2 ways to measure it, percentile and percentage. Percentile-wise, Chirag Setalwal has done a good job. Harsh Upadhyay has done a wonderful job. Nilesh Surana from Mirai has done more right decisions than wrong decisions. Because this is the crux of fund manager. You're supposed to be coming to office every day, take decisions. If you're taking more right decisions, by design, I as an investor would be patient with that fund manager for 2 years, 3 years and 5 years. Okay, fair enough. All right, so let's get started now. In fact, we will discuss some of the funds managed by these managers as well. The top 5 biggest mid-cap funds of the country and what you think of them. So number 1 on the list, as we discussed even last time, because it is such a huge fund, we're talking about the HDFC mid-cap fund, right? Correct. HDFC mid-cap fund is one of them. Then you have Franklin Prima Fund, you have Reliance Growth Fund, you have Sundaram mid-cap, and lastly you have DSP Blackrock mid-cap. These are the 5 largest mid-cap funds. Why is it that in this show it is very relevant to analyze the largest funds? Is because that's where the propensity of viewers having their money could be. So these 5 funds cover 50% of mid-cap AUM. Out of 1 lakh crores which are there in mid-cap funds, 47,500 crores, which is 47.5% of the total AUM is, if you analyze these 5 funds threadbare, not superficially, you would have had a synopsis of half the assets collected in years, in 50 years of mutual fund industry, all AUM collected, half of that can be analyzed in a 20-minute slot. So I'm very excited. So we have a lot of ground to cover, and this is a huge responsibility as well. So let's get started with the HDFC mid-cap fund, because this is a really old fund. It's a large size fund. What do you think of it? So I personally think that it has surprised me by one thing, is Chirag's capability to manage such a large fund, 21,000 odd crores. The next second largest fund in the mid-cap space is as small as 7,000 crores. Relatively, 7,000 crores standalone is large, but relative to 21,000, the second largest is 7,000 crores. So Chirag, point one I'm making is Chirag has done a wonderful job in managing such a large cap fund, such a large fund in the mid-cap space. He has about 16 years of experience in fund management and research. He is today a senior fund manager at HDFC AMC, which is the second largest AMC in the country. Third point is that he is doing bottom-up stock picking. Strategy-wise, bottom-up stock picking. What do you mean by bottom-up stock picking is you're not looking at sectors first, you're looking at stock first, and then being a little sector agnostic. Good quality businesses with high growth is the key attribute to be followed in a mid-cap fund, which he's following.
So if I just quickly look at the returns, I think in the last 1 year we're talking about 9%, 3 years 16%, and over a 5-year period almost 26%. Would you recommend putting in money in this fund?
Yes, I would strongly recommend putting money in this fund because it's not just about return. He has managed risks very well. Okay, there is a concept called maximum drawdown, by which I mean at any point in time the maximum loss an investor could have seen in this fund, even if he didn't exit, would have been about 16.85. The most unluckiest investor who bought at the peak would have seen a fall of 16.85 in the NAV. So I as an investor should ask myself this question: am I ready to take a 17-18% fall on my face value without panicking? Okay, if I can do that, then I will be able to realize the returns which you just read out.
Okay. All right, fair enough. So that's the first fund. We need to take a very quick break on that note. We have 4 more top mid-cap funds to cover. So keep it with us. We'll be right back. Welcome back. You're watching Money, 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 and this week we are discussing some of the biggest mid-cap mutual funds of this country. We've discussed the first one. That's the biggest of them all. That's the HDFC Midcap Fund. Time now to talk about the Franklin India Primer Fund. This is also a reasonable sized fund, Feroze. Its parameters, how do you find its performance?
It's a reasonable size fund. It's about 6,685. In terms of size, it's the third, but 6,685 crores is large amount of money to manage in the mid-cap space. You have Jana Krishna, who is very, very old hand at Franklin, who's been managing this fund from 2011. February 2011. Again, the strategy is bottom-up stock picking. They also have some degree of picking up stocks which are not just high growth stocks, but quality businesses which are coming at fair and reasonable prices. So the strategy of the fund is very, very critical. The strategy of the fund is clearly to buy businesses which come at fair prices, not obscene prices.
Okay, well, that's, I'm guessing, not easy to do in the mid-cap market, particularly in 2017. That must have been a tall ask. How does it fare on some of the parameters, the fund manager's hit ratio, if I could call it that, or success ratio? And then would you recommend subscribing to this?
So firstly it has got the top 10 from a concentration perspective. 27% of the total assets of the 6,600 crores in the top 10 stocks, point 1. Point 2, its standard deviation, which measures the risk, has been managed reasonably well, which is only 13.71. Okay. What do you mean by standard deviation? It is the surprise element of a fund. If the average return is X, if it has a large variability between the return, this number would be higher. So 13 is a reasonably lower number. Okay. And the next parameter which we're duty bound for an investor to know this is the drawdown concept. Drawdown, like I spoke in the previous segment, is nothing but the fall, maximum fall the unluckiest investor has seen during his investment time frame, irrespective of the time he has stayed invested. So that for this fund is just 14% to 15%. Then coming to the last bit, which is again a very important thing, which is the right to wrong ratio of the fund manager hasn't been extraordinarily well. Unlike Chirag, which we mentioned, it is just about 55 to 60% of the total decisions taken. But their top 10 ideas have done very well. Okay, fair enough. So all in all, what would your ranking be, and would you subscribe to this fund? Yeah, I would subscribe to this fund. Franklin Primer has been one of the oldest funds, and I think it has been consistently managed. That's why I would say not a big return spinner, but a risk manager for sure.
All right, that's number 3. So we have to discuss the second largest mid-cap fund of the country as well.
Correct. So that's Reliance Growth Fund. It was launched somewhere in 1995, and it is one fund which has 7,177 crores. So that's again a very large fund. Why is it a large fund for a mid-cap space? Is because the average market cap of the stocks you hold are not going to be so much more like in the large cap fund. Manish Gunwani is the fund manager.
Yes, so there is a fund manager change because for the longest time this fund was being run by Sunil Singhania.
Correct.
Now there's a fund manager change, and sort of does that weigh on your decision whether you dislike of this fund?
So my liking towards Mr. Gunwani is very high.
Okay.
So I would see this as a progressive step to
I think they're not taking fresh money right now.
Correct.
Yeah.
They are refraining from taking fresh money because they're trying to revamp the portfolio. It has not been too long. It's, if I'm not wrong, it's less than a year since the change of the fund manager. I think it went through its own share of phases. Reliance Growth has been 1995, so it's been a good fund, then it went through a bad patch. Now I think it's being revamped.
Okay, so it should be on our radar for as and when it's opened up for fresh subscriptions, and then perhaps one can take a call. On that note, another quick break. We have 2 more big mid-cap funds to discuss. Stay right there. Welcome back. You're watching Money, 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 and this week we are analysing some of the country's biggest mid-cap funds and whether they should find a place in your MF portfolio. Feroze, we've discussed the top 3 funds, the HDFC Midcap, the Reliance Growth, the Franklin India Prima. Let's talk about number 4, the Sundaram Midcap Fund managed by Mr. Krishna Kumar. Again, if I look at from a returns point of view, then 5-year returns, 26% doesn't sound bad. But what are the other criteria, the other parameters that you're looking at to evaluate this?
Sure. A return, it doesn't look too bad. It's done well. It has about 67 stocks in its portfolio, has 28% again in the top 10 stocks. Risk-wise, standard deviation as they call it, higher the number, the bad it is. This is 17 relative to the other 3 funds which we just now spoke of. This is the highest amongst them.
Okay.
It tells you more sporadicity in returns.
So returns could be wavering. Good years, very good. Bad years, it could really lag behind.
Correct. That's what a higher number of standard deviation actually means. As the name says, deviation. If you're expecting something and if there's a deviation.
Sure.
So then coming to drawdown is 19.66. On the risk parameter, doesn't score too well.
Okay.
On the size, of course, it's a very large fund. It's the 4th largest fund.
Okay. And on some of the other parameters that you're looking at?
On the other parameters, I would say the right to wrong ratio isn't too good.
Okay.
Then comes the valuation parameters.
Okay.
The stocks which they've bought have a higher PE.
Okay.
So the average PE by which I mean the price you pay for the earnings you get is 31. So that's on the higher side relative to other mid-cap funds as well.
That's interesting. What have been the average PEs for some of these funds that we've discussed? Because especially 2017 was a blockbuster year. Prices were just going through the roof. So the Sundaram Midcap, that continues to be sort of the more expensive of the lot?
Yes. Okay. So like you, Surobi, a very valid question on behalf of the investors and the viewers, that the mid-cap space went through such a correction because it went far ahead than the fundamentals permitted. So in the mid-cap space, generally there is higher PE. Companies are valued more than they deserve today. And Sundaram on that side has a 10% more. So average PE of the other 3 funds which we discussed was 28. This is at 31. So you have to be more careful, and that marries with the same thing which we just said. Risks are higher because you're buying more expensive stocks.
Sure, the correction can also be then that much more severe as and when it happens. I'm guessing you wouldn't, recommend to subscribe to this. I get that feeling.
Yes. Okay. On the mid-cap space, I would ask you to stick to the largest fund houses. Okay. Not going down to the 10th or the 12th fund house. Okay, and then we come down to the DSP Blackrock Midcap Fund. Mr. Vineet Sambre, I think, is a well-known name. Their micro cap fund, actually, which is now called the small cap fund, I think that's been the hallmark fund for a lot of investors who managed to get in. But how is the mid cap fund from this table? So mid-cap fund is okay, not very good. It's of course the 5th largest fund. Vineet Sambre has been managing it not for far too long, from 2015. What happens is, ideally when you're managing 2 funds, and if you're a mid-cap fund manager or a small-cap fund manager, you might be managing 2-3 funds, but your ideas are limited. So I wouldn't subscribe to this fund, not because I don't trust the fund manager, but I don't see there are too many fresh ideas which have been brought in from 2015 after Vinith has taken over the portfolio.
And on some of the parameters, particularly its risk profile, how does this fare?
Risk profile is standard deviation, again technical. It's the higher the number, the worse off it is. It is at 17. Okay, just to give a benchmark to clients to look at it relatively, Nifty is at 11. If you compare it with other mid-cap fund managers, like HDFC mid-cap had 14, this has 17. So it's a little more riskier than the HDFC mid-cap opportunities as well. On the valuation parameter, they're fairly okay, 28 PE.
Okay, so mixed bag when it comes to the DSP Blackrock mid-cap fund. That brings me to the last question. In the current environment, market continuing to be in a flux, which are the top mid-cap funds that should find place in a person's portfolio?
So I personally believe that if you have a good fund manager with a small fund, it's a very good combination. Okay, Canara Robeco Emerging Equities is a good mid-cap fund in my opinion, because I think that they have ideas. They don't have such large sizes. Mid-cap, the optimal size for a fund in the mid-cap space, in my opinion, of course HDFC mid-cap Bard and of course Franklin Prima fund, we're still giving them that benefit of doubt that they have shown capability. I would look at Canara Robeco Emerging Equities, a small fund from a future large fund perspective.